Good day, Industrial Advisor listeners, and thank you for tuning in. If you have not subscribed, please do so by clicking subscribe wherever you podcast. Click the like button and hit the bell if you want notifications of when we put up new content. Leave us a comment about anything we discuss here today or general comments about the show. Now, let's get into it.
Welcome to our Industrial Advisors podcast. We have Bill Condon and Matt McGregor, and we have an awesome guest on the show today. One of our truly favorite people at Colliers, Dan Doherty, who leads our Las Vegas market, is the market leader in brokerage, in industrial brokerage in Las Vegas. He has an 8-person team there. Absolutely dominates that market. He's been in the business over 30 years. He is a top producer nationally year in and year out, but most importantly, one of the best guys that we have at Colliers and a true friend. So Dan, it's just really awesome to have you on the show today. I can't believe you haven't been on yet, but we're going to talk about the Vegas market and how it's one of the most dynamic markets in the country, and no better person to hear from than the guy that leads that market.
Well, thank you for having me. I feel like I've been on the podcast multiple times because I'm always listening to it. So you guys do a fantastic job. I think the topics are very germane to what's happening, and I'm excited to be here today.
Well, thanks for joining us, Dan. As Bill said, I mean, we're super excited to have you on. You're not only a phenomenal person, but obviously one of the best brokers in our entire company. I'm super excited because I've heard a lot of the stories. Vegas is, as you know, and the listeners about to find out, a very dynamic market, if not the hottest market in the country. You know, it's one of 2 or 3. But let's back up a little bit, because your story about how you came to Vegas and your background, I told my kids, is one of the funnest stories I've heard. So I'm going to back this up and say, start us on how you ended up in Las Vegas.
So born in Fontana, California. My dad was a policeman with the West Covina Police Department. He did that for 10 years, and he joined the FBI, and we moved to San Antonio, Texas, New Orleans for about 8 years, and then Vegas in 1978. So the reason that he got called to Vegas is, if you've ever watched the movie Casino with Joe Pesci, who plays a true character by the name of Tony D'Anspalato, the Chicago crime family started to get a significant foothold in Vegas casinos. So I believe at that time they had a field office in Vegas, and they wanted to ramp it up, get a lot more bodies here, and really start to try to attack white collar crimes is what my dad did when we moved to Vegas.
So that's incredible. So, okay. So your dad comes in with the FBI to try to, more or less take down the mob, right? You told me a story. You hit junior high, and some of the kids in junior high were, of course, the kids of these Mafia families, and maybe you got a couple fists to the face or something like that, right?
So unfortunately back then, and I really should find out how they do it now, but back then they didn't tell you where to live or where not to live. So fortunately or unfortunately, we moved in one neighborhood over from all the mob families, because they all lived together on the southeast part of Vegas. So I show up halfway through 6th grade to the bus stop. First week is okay. Second week, the bus starts chanting FBI sucks every day on the way to school.
Oh, man.
And then I went home and told my dad. He said, you know what? When you go to school tomorrow, get off the bus and ask one of the kids, not one of the mob kids, one of the other kids who's chanting what FBI stands for. So I did that, and the kid said, I don't know. So a little bit of piling on, but the total downside of that was I did get a pretty good butt whooping in 7th grade. One of the mob kids had a 9th grader beat me up, and it was the first of many butt whoopings. So maybe that's one of the reasons I am where I am today.
That's unbelievable. And going back to the movie Casino, you had told me something like maybe your dad and you watched it every year for a long time as a kind of an anniversary thing, and that you made reference that movie was more of a documentary than a movie.
Well, most people would call it fictional entertainment, but the first time I watched it with my dad, I kept looking over, and all of the high drama scenes, expecting him to shake his head like, no, that's Hollywood. And I really think about 95% of the time he was already nodding yes, that did happen. To the point where the mob attorney at the time, a guy by the name of Oscar Goodman, played himself in the movie as the mob attorney. So for those of you who haven't watched it, it's a well done movie, but it's a phenomenal historical on Vegas. And part of the reason that we have the Strip today, because it got so much, maybe not what we call legitimate funds into gaming development, but it got a lot of funds in gaming development.
Wow. Watched that movie so many times. I love Vegas, love the whole, history with it. And that's so cool. Matt was telling me that story yesterday. I didn't know that, Dan, about your background, but that's really cool.
Such a great story. Next question before we get into the dynamics of the industrial sector, Dan. I've been down there a couple times with you, did a client event where we were flying over Lake Mead and you were showing me the significance of, what had happened to that lake. This was probably 2 years ago now. I know there was a big snowpack this last year, but tell us about the dam, the situation, what the dam feeds, and the current situation, because it was very impactful.
So it's been a huge discussion topic. The information we have, which primarily comes from the Southern Nevada Water Authority, is, I believe, extremely accurate. And they're all over the critical problem, because it is a critical problem. 90% of Southern Nevada's water comes from the Colorado River. Las Vegas, you might know, means the meadow. So there is underground aquifers in Vegas that we utilize, but most of it comes from the river via Lake Mead. Lake Mead is down over 150 feet in depth since the year 2000. And we're now, I guess last year you would not consider a drought, but we're well past a 20-year drought. There's been a lot of measures put in place, a lot of conservation measures. Residential, or what they call non-usable turfs, will be illegal. It'll have to be removed by 2026. So you're already seeing none go into new development on the residential and commercial side, but you're also seeing big old school Vegas projects removing turf and replacing it with xeriscape, or in some cases artificial turf, which I happen to be a huge fan of. What's interesting is that we use less water now than we did in the year 2000, despite an increase in population of over 750,000 new residents.
Wow.
So huge cost or water usage cutting situations. Some people have heard that evaporative coolers are banned in industrial construction, which I'm getting more comfortable with. I really thought it was going to be a huge problem because there's several factors that go into that. You have a pretty significant upfront cost on the building shell with regard to roof structure and insulation. Then you have the cost of the units themselves. Then you have an increased power cost going forward that either the tenant mostly or the landlord is going to have to absorb. But what we're finding is we're going to be delivering buildings with just the big fans. They call them big ass fans. A lot of relief vents in the building to create a high number of air changes. And we are starting to see, we have 2 projects now coming with full HVAC. One is a building by Prologis, just over 300,000 square feet. And that's another food company moving here from California to manufacture. And so that's a tenant-driven demand. But then we have a Phoenix-based development company who's building a mid-sized project here, who's going to be the first, I think, to go full HVAC on a complete spec basis on a multi-tenant project.
Interesting. So let's dive a little bit deeper into the market, I should say. Tell the listeners a little bit about some of the stats, high-level stats in the Vegas industrial market, and then kind of why you think it's such a hot and dynamic market today.
So the market's 162 million square feet, small market by most West Coast comparisons or even nationally. What's surprising is the levels of new supply that we've been absorbing. So through the third quarter, so the end of September, we've absorbed and built over 7 million square feet, and slightly more delivered than built. So vacancy kicked up 10 basis points to 1.6%. So that's probably the most surprising fact when people hear that about Vegas, because historically, we have not fared very well in the national or global downturns, as was the case in the great financial crisis of 2008, 2009. So this is the first time in my entire career where I kind of feel like I'm sitting at the top of a hill and looking over the whole West Coast and trying to find another Western market that has the same market dynamics and characteristics that we do, i.e. sub 2% vacancy, very strong levels of supply, still very strong levels of absorption. So that's kind of the fantastic news that we love to push. The bad news, some might call it, or what I call the opportunity, is the forward levels of supply. So over the next 4 quarters, so Q4 of this year, and then the first 3 quarters of 2024 will deliver 16 million square feet. So we've never seen deliveries like that in 4 quarters. And it's actually 17 and a half. But we know projects are continuing to get delayed, especially when they get to the stages of electrical gear, mechanical systems, final inspection. So some of that will get pushed off into 4th quarter 24. So the reason I say opportunities is from a tenant standpoint or an occupier standpoint. If you're coming to Vegas or trying to expand in Vegas to buy a building or lease a building, we've dealt with now close to 7 years of virtually no completed standing inventory. And that's a really tough situation to be in a high growth market like this, especially when you still have a number of companies trying to get out of California and looking at Vegas as one of the alternatives. So we've lost countless deals, small and large, to markets like Phoenix that have always had substantially more standing inventory. So on the one hand, I have concern because I need demand to hold up so we can stay healthy. We know it's not at the same pace it was 12, 14, 15 months ago. So especially when you're talking 1,500,000, 400,000 square feet, as you work your way down the size ladder, the activity, 1,000,000 square feet is slower than 800, 800 slower than 6 is slower than 4. Once you get to about 350, it's still pretty strong, 350 and below. So I'm really looking forward to see how we handle these level of supply. I'm hoping vacancy comes up. I really would like to go on a tour and look at 3 or 4 completed buildings and see how we compete with these other Western markets that we've been losing so many deals to.
So Dan, on that, but by the way, just amazing statistics. You mentioned this is the first time in your career. Vegas has, been a secondary market. It's not a port market, and so when you look at the statistics of Vegas, it's got the lowest vacancy. It seems it has the best demand, better than the Inland Empire, which is your number 1 port, better than Seattle, which is your 4th best port in the United States, where vacancies are significantly higher and demand is way less. What happened? Why is there so much tenant demand in Vegas?
So a lot of things happened. So let's go back kind of pre-pandemic. We built what I call the GFC, the global meltdown of the world economy in late 2008. When that hit, Vegas couldn't get to the bottom quick enough, it seemed like. You've heard all the stories of Phoenix and Vegas and Detroit. And
I remember.
Orlando. We were selling, everything was an apple, I called it then. Everything was $55 a foot. It didn't matter if it fronted a freeway, new construction, or it was 15 years old. If a bank was selling it, it was $55 a foot. To put that in comparisons, we're in the low to mid 200s per foot on leased investments right now. So what changed when we started building buildings again, and Prologis actually built the first building in April of 2014, a 456,000 square foot cross dock that leased right when they poured the slab. And everybody like me was like, oh my gosh, that's crazy. We have a tenant and we have a building going up. So what that started to me is it opened the floodgates to the institutions really taking a hard look in Vegas and understanding that this is a great risk-adjusted return. It's not a port market. It doesn't have 30, 40, 50 years of continuously strong, very absorption low vacancy, huge occupier demand. It was a different set of characteristics, but the institutions came here like I've never seen, and they're still trying to do it today. So on the capital side, that's what got a lot of money coming into Vegas for new development. Then we started to make the transition from the contractor who might have owned land in Vegas for 2-3 generations, building multi-tenant, to bigger, more sophisticated development companies like your Panattoni, who's been here a long time, by the way, Prologis, Becknell, Skinnell, Suncap, Van Trust, and I'm going to miss a multitude of the ones that are building today. But it brought a different level of money supply. It brought a different type of developer here, and we started building much bigger buildings than we've ever built. So that's the supply side. The demand side is companies started to have problems, not just with California type markets, but markets where they deem to have an unstable government. And so that's your Portlands, that's your East Coast markets. Washington State, I know, has had issues with that.
For sure.
And Vegas has always been a pretty conservative political climate. Our police force, our sheriff at the time, Joe Lombardo, who's now our governor, did a phenomenal job of keeping things intact when the riots started, because they started here like everywhere else. They just weren't able to get out of hand, because I really think there was the right people making the decisions on law enforcement, and we were able to keep that to a bare minimum. So I think that got a lot of occupiers to open their eyes and say, maybe I want to look at Vegas. Then you come back to the state of California, which has seen for the first time, I think in history, decreasing population. And we continue to see pretty significant migration. Some companies want to be here just because they want out of California. Some companies come here just to service California. And some companies come here because they understand they can hit 13 Western markets on an overnight basis.
Wow. That's amazing. Going back to the development, I'm curious, tying this into capital markets, because you threw out a statistic, I think you said 16 million feet coming online. Most markets, when we look at them, are trickling 2-3% of the total product in new product a year. You're talking about a 10% online growth based on your numbers. How is the capital markets coming in and evaluating that? Are they starting to get nervous, or are they still super, super aggressive on Vegas? Or is that like a little bit of it making people nervous, those kind of numbers?
So really a totally different situation than we had a year ago. So really just follow the rise in interest rates. So the capital markets are more than nervous about every market they're in, maybe more so in Vegas, because there's such a big pipeline and they're waiting to see how we're going to be able to absorb that. So going back post-pandemic, when I think we had a very strong market growth happening, and then everybody shut down for whatever you think, 3, 4, 5, 6 months with the pandemic. And then we had this huge rise in primarily e-commerce. And Vegas, I think, got more than their share of that. So cap rates hit an all-time low. I believe in the end of 2021, we sold a 400,000 square foot project for Link at a 267, fully occupied, substantially below market on rents, but it was owned by Link. And so they did a phenomenal job on the asset management side, bringing rents to as far as they could. They felt like, I think they pushed it as much as they could, but they also wanted to leave a little bit left in the apple for the buyer. And so that was by far the all-time lowest yield we've seen in Southern Nevada. That a lot of trades in the low threes, mid threes. If you ask someone 15 months ago what were cap rates in Vegas, they're going to tell you 3.5. So we've seen well over a 200 basis point movement in yield to cost. So we're kind of in the mid fives right now. And that brings me to my next comment, which is basically, this is the first time I can remember in my career where we don't have a single leased investment coming to market. And we've talked to all the big teams here. Everybody's underwriting. Everybody's providing valuations like I know you guys are. Just, I don't think anybody wants to put something on the market with such a squishy bottom. They want to have execution. They don't want to bring a project to market and not have it trade? I think it would, because we're still getting calls from a lot of existing buyers and new buyers who want to get educated on the market. We just can't get anybody to transact on the sales side right now.
Yeah, that's consistent with, as you mentioned, Dan, a lot of the markets up and down the West Coast, just a lot of uncertainty and a lot of pausing on the capital markets side. So it'll be interesting to see when that all comes back, because as we know from history, once it comes back in a pretty big way. You've been doing industrial real estate as well as anyone for a long time. What are some of the trends that you've seen just in general in the industrial space? Obviously, you touched on it earlier. Buildings are getting bigger, right? But what else are you seeing that kind of stands out to you? Maybe one or two things that you're seeing from on the trends basis.
So we talked about the rise in e-commerce. The top occupier from a demand standpoint was direct logistics. So Amazon's a great example of that. They're moving their own goods. The top spot for the last 20 months in Vegas has been contracted logistics. So most people refer to them as 3PLs. I think a lot of companies are figuring out that a professional logistics company might be better to move their goods around the world than themselves. So that's the top spot on occupier. Light manufacturing, assembly, food, entertainment is kind of a new one that we're trying to figure out how much demand we're going to see from. So you can see my background for those of you on YouTube. Golden Knights just won the Stanley Cup. Who could have possibly thought that was possible for such a new team? Who could have thought they would make it to the Stanley Cup in their first year? But now we have F1 starting, I believe, November 16th. So they
cool.
came to Vegas. They bought a $240 million land site. There's a broker in my office who sold it to him. That was the fourth time he sold that site, if you could possibly believe that.
Wow. The
Just
gift
off
that keeps
the
on
strip.
giving. Yeah.
Yeah, that's
So
right.
they're going to build their paddock there. So this will be a year around, and they signed a 10-year contract in Vegas. So the little research I've done on F1 says that the economic impact of an F1 race in a city is the same as 2 Super Bowls
Wow.
in that same time frame. So essentially, we have 2 Super Bowls in Vegas every year for the next 10 years. And by the way, we do have the 2024 Super Bowl. Then you talk about the Golden Knights, which I touched on. You talk about the Oakland A's moving here with a brand new facility to be built on the site of the Tropicana Hotel. There's rumors of a potential NBA team. We have the WNBA team that just won the national championship last season. We have a AAA ball club, the Las Vegas Aces in Summerlin, which I'm told is the nicest AAA ball field in the country. So we're used to a lot of tourism in Vegas because of gaming, casinos, entertainment. Now this sports venue, a lot of us are trying to figure out, we know it's going to provide new demand. We just don't know how much. We also are told that F1 will bring more billionaires to Vegas than the city's ever seen by a large margin. So I think every time you introduce someone with that kind of wealth to a city, especially one as vibrant as Vegas, there's a stickiness that can occur with that with regard to maybe they buy a vacation home here, maybe they move here, maybe they move a business here, maybe they move a headquarters here. There's probably going to be some significant positive fallout from all the sports entertainment stuff that's happening in Vegas. We're just trying to figure out what it might look like.
That's amazing, Dan. I've certainly Vegas has changed a lot. And you talk about a lot of people moving there and different attractions. But historically, it's been known as Sin City. Tell us about you raising a family. I know your kids are older, but you raised that family in a different Vegas than it is today. Tell us about how that was as a dad, as a family man, and how it is today.
So I moved here when I was 12 or 13, halfway through 6th grade. My wife was born here. My 2 daughters were born here. And it does come with challenges. Probably the biggest factor of Vegas is, I think, maybe less today than when I was a kid, but it's still a fairly transient community. So everyone you know wasn't born here and their family wasn't born here. I call it the melting pot of the melting pot. So when you have people moving out constantly, I think you just have to pay way more attention to what's important. And what's important isn't always chasing the dollar, but it's spending time with your kids. Bill and I were talking about his kids playing baseball and how it's getting tough to find locations for that. And the same thing's happening here. So especially when you're talking about both working spouses in a family and the kids in childcare, professional childcare, it creates a lot of challenges. I just think you have to spend a lot of time and make sure you're doing the right thing, teaching the right values. Both my girls ended up going to college and grad school in San Diego, called up after all that was done and said, thank you so much. We're not moving back to Vegas. And so they both live in San Diego. And it's awesome because we get to go visit them all the time. I'd rather have them here, but one's a teacher and one is in commercial real estate.
That's awesome. Now, did you guys buy a place in San Diego so you're able to see them
We
quite a bit?
did, and that's on a long redo. So hopefully that's done in the next month and we'll be able to go down a little bit more and have good family time.
Yeah, well, that's a great answer to that question. San Diego is not a bad place to be either.
For
As we
sure.
wrap this up, Dan, you've been awesome, of course, but give us a couple predictions as we're heading into the fourth quarter here in 23 and into 2024 for the Vegas market.
So no surprise, vacancy will have to check up. Again, that's concerning, but it's also going to create a great opportunity for tenants who want to move here and maybe more so local tenants who want to and need to expand. So very interested to see how we absorb these high levels of new supply coming over the next year. We will see capital markets transacting again. We just need to get rid of this, what a great term, squishy bottom, because that's really what it is right now.
That
I
is a
think
great term.
people just want surety on a close. So that's going to start again. Probably, I think by year end, we'll start seeing some trades occur and just got to work through what the Fed continues to deliver to the U.S. economy, whether it be interest rates or inflation. Or I think Vegas is in a very, very good spot coming into a downturn because where vacancy's at, where occupier demand is at, and also market intelligence. There's a lot of teams in Vegas who track the market as well as we do. So I think the information we have on demand sectors, on supply, is going to enable us to make better decisions going forward and hopefully end up a lot healthier than we've done compared to past downturns.
Dan, I want to thank you for being on the show. I know you've been a listener for a long time. You're a great friend. You're an incredible broker. Really, really appreciate your insight. Your contact information is going to be in the footnotes, and I encourage any landlord, developer, investor, tenant that's looking in Vegas to reach out to you. I know on personal experience, you take care of people when they land in Vegas. So appreciate you being on the show. This is a great podcast. Thanks so much.
Thank you guys, and keep doing what you're doing, and I'll remain a huge supporter.
Thanks,
Thanks, Dan.
Appreciate it.
you.
Be well.